It's been a strong night for global equity markets. In the US, markets were up 1.3% and in Europe they were up 2%. The good news really came out of the US, with US existing home sales well above market expectations. Although the data is a little bit deceiving as it does include forced home sales. These made up close on 30% of this total, so this is a little bit deceiving across the board. In other news, the International Monetary Fund chief has been out giving his views on what this recession will do. He doesn't believe it will be of the double dip variety where we see a further recession down the track, although we are not out of the woods just yet. In all, on currency news, the US dollar was out of favour and the New Zealand dollar was trading slightly stronger. On Tuesday morning, the New Zealand dollar is trading at 73.30 against the US. Over the past week, we have seen a strong rally for global interest rate markets. This has also meant that New Zealand wholesale swap rates have decreased over the past week. In general, it has mainly been for the medium-term rates, such as the 2-year rate, which decreased by 15 basis points last week. The big news is really coming out of the US, where the US Federal Reserve continue to reiterate their policy that they will keep their cash rate low for an extended period of time. With equity markets also moving lower last week, this has meant that interest rates have been falling. Here in New Zealand, the Reserve Bank continued to say that the official cash rate will be low until later on in 2010. We believe that the official cash rate will be moved higher early in 2010 as they cannot ignore the positive economic data that has been coming through lately. This includes the increase in the Fonterra dairy payout. This is likely to mean that bank bill rates and short-term interest rates will move higher in early 2010. New Zealand lamb schedule prices have been going one way, and that is down. Over the past few weeks, this has done little to incentivise farmers to put their stock into the slaughterhouses, and this has been reflected in lower slaughter around the country. There has also been little incentive in the store lamb market, with store prices being pretty stale given the negative sentiment in the industry at this present time. Overseas, in the UK, the gap in supply is starting to really come through. With lower supply here in New Zealand also, this means there may be some opportunity for further supply down the track. However, in general, the downward pressure on schedule prices will likely continue for this season.